Hey everybody, hey traders, Chris Pulver here just before 10 p.m. Eastern time. First time I'm having a moment to look at the computer. I had some chart alarms going off today and just wanted to offer a quick market recap on what happened for Wednesday, November 20th. So looking at the SPX, we actually opened, dropped violently in the morning by about 50 points or so, then came right back to close pretty much exactly where we started. In fact, it was a 0.0% day on the SPX. SPY at 0.03. Equal weighted S&P actually clinged to some small gains there, 0.34. Futures down a little bit going into the Asia session. And we're taking a look at NASDAQ now. QQQ down slightly. Dow actually up 1/3 of 1%. Russell clinging to some gains as well, just a little bit. We'll take a look here. Volatility index down slightly. Actually, switch the chart back up. We'll go SPX here. So some good chop trading in the middle of the day. This would have been a bottom around 10:30, 10:45 to roughly 2 p.m. Some pretty good indecision there, but just right out of the gates directional, and then end of day directional. So hopefully, traders didn't get beat up too badly if they were trying to day trade or try to keep some neutral pricing. Have a look at this chart. This just has some really simple moving averages. We are still kind of in between a couple of gaps here on the SPY. We still have some gaps to fill with the election candle. We potentially have this little sell-off from last week on Thursday to Friday. So potentially we come back up and maybe find this area before getting faded. Maybe this is acting as current resistance since we're sitting here with some small green on the week. This is the shaded green zone. But if we fade hard off that move or just chop around, just be careful of this noise that we're seeing right now. Anyway, that's where we're at on the S&P. Look at the higher time frame. I'm still interested in buying some dips. I'm currently hedged on a few positions to the downside just in case. Volatility has gone down a little bit. We had a big spike up last week on Thursday to Friday. That move is getting faded just a little bit. We're kind of right in the middle of this gap fill on the VIX. Previous highs around 23.5. Previous lows, that was after the election rip. Around 13.7. So if we just stay kind of elevated, we'll see if that's mediocre volatility moving forward towards the rest of the year. The dollar index showing some pause here at the 107 handle. That comes right back up into these highs from 2023. That would be October 2023. I do have this larger pocket zone, this big inefficiency, all the way back into this decline back in November 2022 when the market was clearly deleveraging in tech and the dollar was getting stronger. We had a bit of a risk-off move in 2022 through about 9 months of trading. So I am looking to see, perhaps the dollar, if we do drift higher into this bigger inefficiency zone or this bigger pocket around 108 to 109, I'm looking for tops on the dollar in that zone. I'm waiting, even if we see it right now, we could see some indecision like we had here back in October 2023. If we match that going into the end of this year, I'd be curious to see if the dollar continues to push higher and fill this pocket, possibly come back up to these 2022 highs. But that would be a pretty big risk-off tone, if you ask me. If the dollar's getting that much stronger, then we're likely going to see the equities market leaning lower. So if we turn here on the dollar where we see some resistance and we start heading back down, then I could see the equities market still pushing higher and melting up through the rest of the year. Let's take a look at oil. Oil lows, we're still tapping that $67 area. I do have some exposure there, just a simple bull call spread going out to January if oil will hold above $69. Natural gas is actually running a bit higher. We've broken some multi-month highs here. This goes back to October. This goes back to June of this year. So we're breaking some summer highs as well. I did look at natural gas as a potential head and shoulders trade. I'm not in this trade. Obviously, I wish I was. I had some chart alarms back around this $2 handle to $1.65 handle, hoping if we had a retest of those lows, which we just don't. So I'm not going to chase natural gas this late in the year, but I do think that pattern-wise, this looks pretty good to come back into these inefficiency zones between like $4 and $5. So if anybody is long natural gas, I do like that play. I'm just looking at some targets around that $4 to $5 handle. Gold has bounced nicely off of the 100 moving average. And so I did buy some more shares of GLD at the 100 moving average. I also put in some longer term credit spreads at the 100 moving average. I'm still going to use this area in case we go lower. So if we go high to low, lower high to lower low, if anybody can see my mouse here perhaps. So if I go high, low, lower high, lower low, I'm still interested in establishing some more positions on gold. So gold, silver, I still like bullish. I'm not necessarily crazy bullish. I don't think we're going to all-time highs anytime soon. I just think this is all part of a bigger correction. We've had a fifth wave completion, and in my opinion, that is calling for a, B, C correction, which should be somewhere back between 2,500 and 2,400 before I get long and is starting to establish more positions on gold. Same thing with GC, which is gold futures. Like I said, around that 100 moving average, I went ahead and bought some shares at 237. It's up to 244 right now. Take a look at silver. Silver is lacking some of that pop that gold had. I still think silver is very well supported in this current environment, either looking to see if we make higher lows or if we just keep retesting the backside of this trend line. If I extend this out a little bit, retesting the backside of the trend line, and then some really solid past resistance becoming future support right around 26.20. Yeah, so SLV still kind of patiently waiting. I did have some credit spreads in. If we come back into the 26, or in this case SLV, the equivalent of XAG USD to be 26, that would be a breakout point around 24. So I will buy more shares of SLV at 24, but I'll be waiting for that. I just want to see how this current area plays out. Bitcoin, we just actually broke some fresh all-time highs yesterday. So yesterday's trading, and I'm curious to see what this looks like moving forward. I'm sure everyone is eyeing that 100K mark. I've got a measured symmetry move around 107 to 108,000, and BITO has made some new highs. I need to check on some options there. I've got some call options that are out to 2026, but because of all that extra time value I have in them, if the price is going higher, if Bitcoin does hit, a quick run to 100,000, 105,000, if BITO resembles even a percentage move that's somewhat similar, I'll probably end up closing out those long call options and just holding the shares that I have. I also have some income plays all the way back down here to the lows. IBIT just made a fresh high in that one, and FBTC just made a fresh high in that one. One stock that was pretty ridiculous again this week and again today is good old MicroStrategy, the company that has probably one of the largest Bitcoin holdings, as well as one of the biggest individual Bitcoin holdings with Michael Saylor, MicroStrategy, and the like. There are some pretty wild numbers coming out fundamentally where, the company itself, I look at it, I use a, fundamental source that just shows it's trading at a crazy multiple. The fact that it's outperforming Bitcoin is incredible. And then there's MSTX, which is a leveraged instrument of MicroStrategy, and that's even crazier. So I'm just going to say this, I have a lot of trades on MicroStrategy that are income generators. I'm actually looking at potentially doing like an inverse it's an inverse butterfly spread. And I do want to look at that this week if I have some time to sit at the computer. Basically, it will look something like this. So I would have, if you're familiar with options and a risk graph, it will look something like this. There's going to be my line. I'm going to generate some type of credit on the trade if I can, have a bit of that's going to be my problem zone, and then give myself some type of way out. So it's a trade that I would put on for something that's very highly volatile, which I believe this is, and I can make money. Basically, if price goes higher, I make money, and if price falls way lower, I make money. There obviously is a profit trap. It depends on the credit spreads, or not the spreads, but the strikes that I can take in this trade. And so this would be where I'm losing on the trade. But if I basically establish it to say somewhere current price around 473, and depending if I go out, 3 months or 6 months or whatever I can look at on the option chain, if we go way higher, there's big profit potential here. If I go way lower, there's at least some tail credit and profit potential there. I'm just trying to avoid it going nowhere. And I think over the next 3 to 6 months, I would assume we're not going to stay here at 473 and just stall. This stock has been crazy volatile, and typically what goes up, what seems to be exponentially, will typically have a very violent correction as well, or just be volatile. Even if it's buying dips, they will happen very quickly and be quite volatile. So just be careful on MicroStrategy, just in case. So I'm trading a lot of options. I wish I owned more shares of it. I wish I dollar cost averaged into it more. All of my levels were back in here in the 100s. And then once we hit these highs around 205, I ended up scaling out of my positions. Then I just put in a bunch of options trades. So still looking okay. I mean, obviously there's good trades to go, and I'm way out of the money on a lot of those trades, which is fine. We get to Coinbase also stretching to some fresh highs, which I'm happy with. Ethereum still not breaking recent highs. So we're making all-time highs on Bitcoin. Ethereum is not. And I do have a credit spread here. I need this to stay above $60 for full profit. That's EETH. If I take a look at copper, copper's had a little bit of a pop here just in the last few days. Japanese yen is starting to fade again. Just be careful on the Japanese yen. I keep saying this. It's one of my least favorite currencies to trade. It is so tricky and so slippery. If I go to something like the dollar yen, for example, dollar yen, I wouldn't be surprised if this potential, even though it's weaker, I mean, this is an incredibly strong carry trade from 2022 to 2024. Even if it's a little bit weaker, but we still find a way to work our way to 162, maybe even tap these levels. Here's a nice big pocket up here on this candle between 160 and 161. It wouldn't surprise me if price stays, especially if the equities market hangs in there without a lot of risk off trading, that this market finds a way to grind, find this level, possibly test the highs, run some stops above the highs, find some liquidity up here, and then flush back down and establish a much larger range, which would be basically 162 down to 141 or 142. So if I can spot a good area and a pattern trade with defined risk on the yen crosses, or find something I like on the futures market with /6J, I do like trading the yen. That's about it. I definitely want it to be risk defined, and it goes for forex too. Make sure you trade small and have a stop loss just in case. Nikkei, on the other hand, not much is going on there. It's been chop suey since we had that deleveraging event in July. I'm going to move on here to the DAX, which is the German market. We're pulling off the all-time highs a little bit. You've got the FTSE at a pretty critical spot. I mean, this is the UK market. If we end up holding these lows, I think this is a good opportunity to buy low and see if we can get back into these recent highs. There'd be some good asymmetry there, and the risk is pretty tight. So if we're stopping below, 79.80 or even 79.50, I wouldn't hold on to this trade to the downside. I would just say it's invalid. So I'd look for a daily candle close or weekly candle close below. Otherwise, I like long the index until we get back into like 84, possibly making a run towards 8,500. If I go into the Mag 7 for a moment, Apple is up to 229. I do have a 230 cover call for December. We're not that far away from holiday trading. I want to take a look at NVIDIA here in a moment. We had earnings on NVIDIA today, as well as some other plays. There's only 131 companies reporting earnings this week, but NVIDIA was going to be one of the big ones. Apple up to 229. Amazon hanging in there at 202.88. I've got Amazon covered out to 210 in January. Google still doing pretty well. I've got some bull call spreads down there. Meta, I'm looking to see if I can get some better pullbacks. I'd like to see a nice kind of orderly decline on Meta, just making some slightly but tighter lower highs and lower lows. Either looking to express some option trades back at 500 or come back to find some major support here at 451. I do have a 111 trade on here, which is I basically have a bear trap, and then I have a sell put. It's a cash secured put because I would own the shares in Meta if I could, but I'm getting $1.80 credit on that, and I'm willing to own it at a 30% discount from these all-time highs. So most likely this could be just an income play. This is an expiration, I think, out to the end of the year or into January. Microsoft, I do have a 1220 bull call spread. We're trading at 415, and I need this price to get back to 435. So I'd like to see a little rally on Microsoft by the end of the year. If we don't get it, it's defined risk. The other trade I have on here is a 350 by 345. This is a way out of the money credit spread. If I lose on this one, 265, but I win on this one, this is a ratio spread. It's just going to neutralize some of the loss. I mean, I would basically lose about $1.10 instead of 265 on that trade. So, but if we get above it, then I can win $1.55 and 265 per contract and be good. Netflix continues to go higher and making all-time highs. Again, starting to get a little capitulated, so I would be careful on Netflix. I'd be looking to tighten up some stop losses and reestablish some positions. Also, I wouldn't mind putting on some type of protective downside on Netflix just in case. I could certainly see a pullback towards either the 21 or the 50 period moving average. But I just think this is it's still a great stock. I mean, Netflix has clearly cemented itself now and asserted itself as the king of streaming. And I want to say last week with the Mike Tyson, Jake Paul fight, I'm pretty sure they broke some crazy streaming records. But anyway, I mean, I have some income plays just like I typically do. I'm just not doing much with own shares because it's gotten pretty expensive. And, I just want to see if I get some better opportunities. NVIDIA, we're trading here at 145. Let me see what the earnings print was. So they beat revenue by 5.77%. They reported earnings over 8.26% better than expected. I'm curious what this does for the pre-market tomorrow. NVIDIA by itself at $3.58 trillion would not surprise me to move the market maybe 0.25 to 5% on its own. It is that big of a company, that big of a market cap weight, and that the SPY itself, the Qs, could move a decent amount just on NVIDIA earnings alone. Let's see what the market does tomorrow morning. I do have a credit spread from the 137 to 138. Speaking of MicroStrategy, here we go. Takes Wall Street by storm, becomes second most traded stock after NVIDIA. That's insane. That is insane. I did read that this morning, actually. Crazy stuff. So anyway, NVIDIA, a 132 by 130, that's a ratio spread, which is down to this area. Then I also have a credit spread, the 138 by 137. So if NVIDIA pops the upside to all-time highs, I'm still looking to make some income. That's 50 cents here, 257 here, and maybe take zero assignment. But I'm still a little cautious in the longer term, just to at least have some type of pullback, which I'll be patiently waiting for because we are now 470 bars, something like that. This stretch away is around 460, let's say it's 463 bars between hitting the tested moving average here. This is a 200 exponential moving average and current price. And I just think we have slower upside. So even if we gap higher, we probably fill. Gap higher, we fill. I'd love to see just a pullback into these moving averages before I establish more positions. So I'm trying to establish positions on NVIDIA with the intention of owning and using some of the really rich premiums to lower my cost basis. But if the stock just keeps going higher, I may not have the ability to take any assignment. So if that's the case, I'll just kind of chase it with options, chase it with income plays, waiting patiently, of course, but still try to just pick my battles. Tesla, 342, decent pullback towards 309. I was hoping that we'd have a deeper pullback, i.e., high, low, lower, high, lower, low, and finish in here between like 300 and 280. Then I start to establish more core positions and more option trades on Tesla. But as of right now, it just keeps going. My target on Tesla, as far as any type of ownership, any type of option plays, would be if we hit 400 plus and we get to these recent all-time highs back in 2021. Berkshire Hathaway, I'm just going to wait on this one. Bond market, yield market, let's take a look. The 10-year yield is basically flat. We're still in the 4.4 zone. Let me see. I'm going to investigate this later in the week, but I'm curious. We had Jerome Powell give some comments last week, and the market for the CME watch tool for the Fed is basically like a 60-40 probability right now that the Fed would still proceed with a rate cut December 18th. But something tells me that if we don't have improved inflation numbers, that's going to quickly become like a 50-50 predictor. And we don't know what the Fed's going to do December 18th. And I think that's a potential red flag for finishing the year on a strong note, because if the market is uncertain about what the Fed does, then it's going to be very reactionary in a lower volume holiday environment. And that could be good for some type of explosive move higher, or that could be bad because it's lower volume and the market all of a sudden turns south with some type of aggressive pivot being priced in by the Fed. Fed decision to possibly pause and be a little bit more neutral to hawkish going into 2025. So we'll see about that. Mortgage rates hasn't changed. This is 6.78 still. I'll get into some currencies here in a moment. Here is the Hang Seng, which is one of the China indexes. We're sitting here with just a little bit of stability around that 50 to 55% pullback zone from that big September blast off. Alibaba is just kind of slowly leaking lower. I'm curious if we get caught up in any of these Fibonacci zones. Baidu is all the way back down pretty much to 80 to 90% of this low that we had back in September. And I'm curious if we come all the way back up here. This is what I'd like to see. Either we come back in and retest this level, possibly spike these lows and establish another range trade, or we come all the way back up here towards 95. We pattern like a little head and shoulders or some type of cup and handle reversal pattern, and we look to get long to revisit these September highs. So I remain somewhat technically bullish on China stocks, but my exposure is what you see here. I have some option trades and shares in Alibaba, Baidu. The rest are options on FXI and KWeb, and then JD. I have some shares as well. JD is hanging in there. They actually had a miss in revenue, but a beat in EPS. And same type of thing. If we had a high, low, lower, high, lower, low, do we have the ability to get back up here into the high 30s or low 40s? I do have a cover call at $40. and I'm trying to get it called away for some income. The other two that I'm watching closely on that same note would be Pfizer. Pfizer, which is stabilizing off this $25 handle. I actually have a break even right now on a $25 call. My break even is actually $24.92. So I could potentially have $0 on Pfizer as opposed to losing. But I'm really hoping that this is a stable level that wants to start coming back into the maybe $27, $28 zone. I do have some sell calls against my long calls. I kind of treated that like a calendar spread. Or a diagonal spread, but even still, I'm watching Pfizer closely. And then Oxy is the other one, OXY. So OXY, that's Occidental, and we're trading at 50.91. I moved my strikes down. I think I moved it to $52 or $51, and I'm just trying to turn this into a nice little, $52 of net credit and take that on 500 shares that I own, and trying to generate a few bucks on OXY. So that's a quick top to bottom in kind of my pulver report slash, final hour watch list. When it comes to where we are at on the indexes, again, go back to the SPY, go back to the Qs. I think the most important thing that I can do right now with my time away from the market is I'm not able to spend the time day-to-day trading like I usually do for this week and next week because I'm going to be traveling and going to conferences. And so what I've done with the entire portfolio is I have protection on MES. I bought some puts. I have protection with MNQ. I bought some puts. I put on some downside protection with some very cheap, inexpensive SPY puts that basically if we have some type of outlier event where we would have a quick 5 to 10% decline, more like we had here July to August, if that were to happen again before the end of the year, I just want to make sure that I have some very cost-effective, 10 to 20x returns on hedges just to offset any type of trouble. Now, the easy thing to see here would be if price just keeps going higher. And if we have a melt up, that is fine. I did talk quite a bit last week in some live sessions about, why I think the market could move higher and why I think the market could move lower. And it was pretty even. I have 6 compelling reasons on why we could go up. I've got 6 compelling reasons why we could go down. And so I think the important thing for me is to make sure that I'm downside protected while also still benefiting from the overall portfolio with a melt up. Okay, let me go to a few currencies here just to take a spot check. So Aussie CAD, I'm still looking to get long in Aussie CAD. Swiss pairs, I'm still just focusing on buying lows and holding long for some positive swap. Yen crosses, I'm not really doing anything with. Aussie New Zealand is starting to look a little bit better to the upside. I don't particularly like this area. But I will say we have made low to high, higher low, and this is still making higher lows and higher highs. I could see the Aussie getting stronger, especially if China wakes up a little bit more and continues to talk more about their stimulus measures and supporting the capital markets. I think the Aussie benefits more so than New Zealand. And if we see that direction, I could see the Aussie New Zealand getting up into this 114 handle. Longer term, I would personally love a range trade once again on this pair. If we did come up into 113, 114, and we turn hard, I would love to see that as a resistance zone to sell like crazy, and then do the same thing at 105 down to parity and just buy low down here, sell high up here, and then in the middle, I'm trying to look at if there's a path of least resistance, buying now with a stop loss below this recent swing, or buying now with a stop loss below some moving averages, and just try to see if this will be some type of trend by the end of the year. Dollar crosses, again, not really sure on the dollar direction, but Aussie dollar, I am looking to buy in on some Aussie dollar. I've got pending orders there. You can see on the chart, 6,300. We haven't quite hit it yet, so I'm waiting to see if we come in lower. Let's go CAD Swiss. I'm holding long for some swap. Swiss yen, CAD yen, not doing anything with. Euro yen, not doing anything with. Euro CAD, I was looking for sell opportunities. This actually pulled back really nicely. I was talking to traders about a potential support level here. Support level to become resistance right around that 48.50 to 48.90 zone. It's right there where you can see the bounce. So that was a really nice resistance and rejection spot. If we pull back, that was area 1 that I wanted to trade, and then possibly a deep pullback around 50.50 and a stop loss above these swing highs. But I'm looking to see if EuroCAD will sell off lower. Euro Swiss, I still hold on to my long positions, and I'm enjoying some positive swap, but it's not really moving my direction. Euro pound, I'm still long, and we're about break even on that trade. Euro yen, nothing. Euro New Zealand still range bound in my opinion. Euro dollar, just watch the dollar index. I wouldn't mind taking a stab at this area on the euro dollar just to see if we get a turn, but I'm looking to see is it just choppy on the DXY like we had here on the euro dollar back in late October 2023, as well as February, March of 2023. If the euro dollar holds here, I think it's going to be a messy area, so just be careful of those bear traps. But if we hold here and then reverse or hold back here and then get above, let's say 106, I think 106 to a pullback into 107, 108 is very realistic for the euro dollar. But I also don't want to be fighting some type of bull market on the dollar and more strength in the dollar. And then all of a sudden we see the euro dropping back down towards parity. So I wouldn't hold on to this forever. Obviously, if the dollar is going to get stronger and the euro drops all the way back down to parity or lower, way more interested in buying at parity, holding it down towards 96, and then just looking for a big, fat, like huge reversal on the euro dollar at some point. So we could have a bear trap here. Just be careful. But if we get back above 106, I think we go from 106 to 108 pretty smoothly. Pound crosses. Pound Aussie, nothing that I see that I like. Pound CAD, I'm looking for short opportunities. There's some chop up here to sell below 78.50. Pound Swiss, I still remain long on Pound Swiss. That one's really sideways. Pound Yen, no trade. Pound New Zealand, range bound, in my opinion. You know, we had a bit of a spike up here towards 2.19. Look to see if we have some intermediate lows at 210. So basically, it's a sell around 2.19 with confirmation, a buy around 210 with confirmation, and just kind of stay out of the chop in the middle. So I'd either wait for this to sell high, wait for this to buy low, or just just sit on the sidelines for now. Pound US dollar, I'm looking to see if we bounce on the backside of this trend line. So I'm looking to get long here on the pound US dollar and even come back into a very short-term target like 28.30 looks pretty good for me if I'm buying pound US dollar. New Zealand CAD, I'm looking for a turning point. You know, we have made higher lows and higher highs. I'm looking to see if this will turn green or turn bullish, take this down to a smaller time frame, look for some confirmation. I like this New Zealand CAD heading back up to some 8,600 levels, trying to get it back up here towards 8,800 for my profit target. New Zealand Swiss, still holding on for some, it's very choppy. You know, we have a flash crash that could be retested. We just have a lot of support that I'm buying and holding towards the symmetry target around 55.50. New Zealand yen, no trade. New Zealand dollar, I'm long in. So I bought it around 58.55. I have a few levels that I'm interested in trading. So I'm going to be watching for I don't know if, November 20th or even the next 30 to 45 days is any good time to top out on the dollar, just because seasonality wise, we could have, what's put in motion stays in motion. But coming into the end of the year or into January, we could possibly see some hard pivots on the dollar, especially if the Fed changes something in December with their December 18th FOMC meeting. There might be some pretty big plays on the dollar to come up. So just be on the lookout for that with the dollar. Dollar CAD, I still remain long in the dollar CAD. We had a nice pullback here. We're trading at 39.71, and we had highs up around 4,100. I'm still going to remain long on this currency pair. I've only been filled on two orders, 40.25 and 40.75. This pullback to me is not a derailment. This pullback to me is an opportunity to look to get back in around 38.50 or 3800. And if we pull back deeper, if we pull back into like 37.50 or 36.50, I would probably end up taking another chunk down here to buy in and then be long dollar CAD. So to me, this is a measure move to 44.50 or 4,500, potentially a multi-year high retest at 4,600. So for right now, I'm just going to be patient on these two trades, potentially getting back in around 38 to 3,700 if it's offered, but I'm trading this one really small as a pattern trade. Dollar Swiss, I'm still long. We pulled back a little bit, but I'm going to remain long, getting up to 9,200. And then dollar yen, just keep an eye on that potential sneaky little carry trade. I guess I have to type the symbol in correctly. There we go. So dollar yen, if it just stays bullish and continues to drift higher, I would look for an opportunity to confirm something bearish at the tops around 162, or just wait for alignments to start confirming. A lot of times the Japanese yen does have a seasonal move to it. Maybe it's topping out in November, maybe it's December, January. Just be on the lookout for some type of Q1 move, but don't fight what you see. If you see a trend, don't fight it. That's the one thing that I would say over the years that's been the only success I've had in the Japanese yen has been, don't guess where it's going. Just trade what you see, use smaller trade sizes, use good risk management, and just try to go with the flow, because the Japanese yen, when it moves, can move for months and months and months and have very little efficiency. And I think that's what bothers me about it, because I'm usually a very technical trader, very efficient, and this one tends to be more of like a fundamentally driven currency. So, and basket for that matter. So, all right. That being said, I think we've been at it here for around 29 minutes. I think this is kind of perfect timing to let it go. So videos like this will be coming out while I'm traveling for the next 2 weeks, just so you know, so you can check this out with my TradingView following as well as my respective social platforms. And thanks for watching. Thanks for being here. And happy trading, lots of profit. See you soon. Thanks. Bye.